Hi, welcome. Dave Seymour, Freedom Venture Investments. This is for our Legacy Alliance attendees, also for our Freedom Venture investment groups. You know, there's stuff going on all the time, and how it affects us is always a good point of interest. And we're looking at the OBBB, and that's not a dating site acronym, right, Eric? One big, beautiful bill that's delivered by our Commander-in-Chief, Mr. Trump, to push through this bill, which has some ramifications for us in the commercial real estate world. It has other ramifications for us in the taxation structure in which some of us might be living. So we figured we'd take 5-10 minutes. I got Walter Novicki, our Chief Investment Officer. Eric's with us, Eric Wilson, our Chief Operations Officer. So I'm gonna play dumb when it comes to this stuff because I know what I'm really good at. I looked at the breakdown that we discussed yesterday, but I want to know, why should I care about the big, beautiful bill that Donald Trump has, now got back to the House, and will it be passed? And if so, what does that mean to us? So any one of you guys got to throw in 10 cents, I'm ready to listen. So tell us about Jeffries. What's he doing right now?
There you go. Well, back to what we were talking about. about. So, the Democrats have tried to stall the bill. They tried to stall it the first time through the House, went to the Senate for reconciliation. They tried to stall it there. Now it's back to the House. They're anticipating having a vote later today, hopefully, and hopefully it gets passed. The fact is, it's going to become law. There's really, unless there's a massive political uprising in the Republican Party, which nobody is anticipating, it's going to pass. There's some good things in it. There's some not so good things in it. I don't like them pushing the debt ceiling up. 5
what number was
trillion.
that? Was like 3 trillion? 5 trillion?
No, five.
Yeah.
$5 trillion they're going to raise the debt ceiling. Now they're saying that the impact is going to be 2.4 to 2.8, but that's with offsets. So offsets are never guaranteed. The government likes to spend money. It doesn't often cut items. There's just political ramifications. Just like, have you heard all this? What have you heard? Have you heard all the?
What do you think the ramifications
people
would be if they don't raise the debt ceiling?
Say that again, Eric.
Like on the flip side, I get you don't want to raise the debt ceiling, you don't want to spend, needlessly, but the ramifications if they don't raise the debt ceiling, do you think that is better or worse than raising the debt ceiling?
I think personally, I think it's better. I think you live within your means. I think it's better. I think we need some massive fiscal conservatism, not left, not right, just common sense. We are spending more than we're bringing in. We need to put an end to it. You look back, it was the last president to have a balanced budget was a Democrat. Bill Clinton balanced the budget. Now, he had a Republican Congress to do that, but Bill Clinton balanced the budget and led to massive economic prosperity. And then we go back into this spend, and when we brought W in and we decided that we were going to go to war with the world, we were spending money like there was no tomorrow. We have to get back to fiscal conservatism. If we don't, we're not going to have much of a country. You look at the debt clock. Look at all of our unfunded liabilities and what's happening there. We're running up a bill.
Well, I think that's kind of the part of the problem. We are running out of time to pay our bills. We're running out of cash this summer. I feel like absolutely. So that's definitely. So I mean, there's so many different things in this bill. Raising the debt ceiling is just one aspect of it. But what do you think is the most impactful for us here at Freedom Venture?
That's great. I'm going to dive in on that. So I've listened to the argument that Walter just put out there, and I agree and disagree at the same time, right? So I'm a fundamentals kind of guy. You two both know that. And for me, I look at that line of conversation that Walter just shared in there, and it's kicking the can down the road, which has been, and as far as I'm concerned, for the foreseeable future, will be the modus operandum for government entities, right? I don't dispute you or argue you that Clinton balanced the budget. I can neither confirm nor deny. But to Eric's point, right, what does this bill do to me, my family, our investors, and us as a company, either on our education side at Legacy Alliance or our investment side at Freedom Venture Investments? What does it do to us? And I think for me, I consistently look at macro over micro, right? The macro markets, $3 trillion, $5 trillion, $4 trillion. The interest that we pay on our debt, the interest that we continue to pay on our debt. You know, why is the Trumpster, man slamming Powell in the media right now? Because, a big part of what he needs to do, the president of the country needs to do, is to lower that interest rate so that the government at the same time, I would assume, is in a better position to pay their bills as well. So all of that being said, right? Interest rates up, interest rates down, big, beautiful bill through, not through. I look at what does it do for us? And I'll use my family as an example, my boys, right? I've got a 30-year-old son, 15-year-old son, 13-year-old son. If I do not take the responsibility of building something for them to walk into that is built on fundamentals, and I rely on the macro environments, I think I'm going to be in trouble, which goes to our education around, control at Wall Street, et cetera, et cetera. So can this big, beautiful bill be beneficial to us as an investment company, our investors, and my family? I think the answer to that is yes, based off extending some of those tax benefits that we have as business owners. And some of that data that you shared yesterday in prep for this call, I like what I saw there. So Eric, why don't you unpack that a little bit, because I'm not that great with the numbers on it.
I almost feel like we should talk about a few of the issues in it. This there's literally so much in this, and there are some good things in there that I see in there for us, but I also think there's some things that are going to put some downward pressure on our current portfolio and how we approach new investments. So yes, there are going to be some tax cuts. I think maybe some higher income families might be the beneficiary of some of those, like the SALT deductions. That's going to be good for certain families in higher income areas. That could be good for some of our investments with A, B tenants. Their ability to pay, they might have a little bit more money in their pocket based solely, all else equal, based solely on that. At the same time, there's some limitations on the SNAP programs, food stamps. We might see a squeeze on some lower income housing, maybe. But then, if you talk even bigger on a macro scale, some people are saying that this bill could have a general inflationary effect, across the board. So then, maybe some of those savings that people are getting by those tax deductions are offset because inflationary, they're going to have to spend more just on everyday living costs. And then when you kind of hit on interest rates, there's an idea that this bill could also increase rates a little bit and expand cap rates. So all of these different levers, we have some, things that might be good for us, but we also have some things that could put some downward pressure on the portfolio. So it's such a nuanced conversation, in my opinion. I feel like for us, it's important to not get overly caught up in making decisions based on legislation, trying to stick to the fundamentals as much as possible. And when we invest for the long term, that's when we do our best. But obviously, we need to talk about this bill because it's such a big topic. Right now.
You know what's interesting? I'm going to take it to the simplistic again. It's where I tend to make most of my progress. Think about the investors that we've talked to just in the past couple of weeks. Like the uncertainty of the tax environment, the inflation environment, the geopolitical environment overseas, multiple wars. Trump's a lunatic. Trump's the next coming to who, right? You got so many reasons for people to say things are not going to work. I'm looking at some of the data you sent over, the increase or the sustained opportunities in the op zones, right? The opportunity zones, the low income housing tax credits. you've got all of these carrots, I think, that are out there for the educated entrepreneur. And if we can look at what we can employ and deploy that is beneficial for that longer term investment, to your point, then we do well. But if we sit there and say, I'm leaving my money in the bank and devaluing it at, whatever percentage it is because, Putin hasn't got out of the Ukraine yet, and Trump said he was doing a deal for the rocks that are needed to make chips with Ukraine, and now he just stopped sending them machinery. Oh my God, I can't invest. Yeah. Sorry, with all the love in the world, you're a moron, right? You got to get up out of the quagmire, out of the crap, and to your point, Walter, bring some fundamental common sense to the investment. And I think that's where we do well, right? If the opportunity works in our underwriting, then we'll go take an opportunity zone. A good friend of mine is a absolute genius in the low-income housing tax credit world. And if I brought that guy on there, he would razzle dazzle and work magic with his numbers and his underwriting using, tax credits and government funded this and funded that. But at the end of the day, you guys know this. I want to look in the bottom right-hand corner of the spreadsheet. And does that number make sense? And has it been written and underwritten with integrity and a conservative outlook? And if I can tick those boxes, then I'm prepared to move forward a little bit. And if we reap the benefits, the tax benefits, if we can avoid the down pressures because we're conservative in the way that we do business, I think this could be a big, beautiful bill for us. But we'll have to wait and see.
No, I agree with that, and I agree with the simplistic mindset in the fact that I don't think investment decisions should be overly changed. I don't think philosophy should change. Think about all the big knee-jerk reaction stories that we've seen since our inception of a company, right? Like if we just reacted to every legislation that was passed or, the next, thing in the short term, we'd be going this way, we'd be going that way. But when we've had our best success, it's just been sticking to the plan.
Do you remember when Walter's favorite president, Joe Biden, was coming into office, and Walter's favorite, and the big take was that he was going to take out all of the 1031 exchange language. Do you remember? We were no longer going to have 1031 exchanges, and Walter was campaigning for Biden. He was campaigning to have that removed. And, Walter, I'm waiting for you to hit my mute button. But no, seriously, he wasn't his favorite president. Seriously, though, those 1031 exchanges, that was the big news, right? Then there was the oil prices because of, Middle East conflicts. It's like we're not in a knee-jerk reaction business, which I'm very happy about. But anyway, again, look, we'll see where this thing lands. Walter, I don't want to go on forever. Wrap it up. Give me a nugget of insight before we wrap up this call.
No, you're 100% right. I agree with both of you. We invest for the long term. You cannot allow these minor glitches to impact you. Real estate goes in cycles of decades, not days. We're not day traders. We're not sitting there. Trading options are going to expire the third Friday of the month. We're investing for the long term. So if the rules stay the same, regardless of who's in the White House, regardless of what's happening, the rules stay the same. You buy quality assets, you make your money on the buy, you build a portfolio that makes sense, and you're going to profit in the long term. Let's go back to when I was a kid. You could buy a house for $6,000. And that same house now is $400,000. Okay, that's real estate. That's investing for the long term. So, as long as we stick to that philosophy and we don't get distracted, I think we do well ourselves and we do well for our clients.
So here's what I'd like to do before we wrap this out. For any one of you that sees this, hears this, I'm going to make sure that there is an option for you to click it, approve it, love it, whatever that social media world does. But what I think would be beneficial for everyone is just send you the one pager that we broke this thing down that affects us. So we'll throw that into just into a doc. Maybe we'll add it to the weekly newsletter that we have, but we'll add that as well. For any outreach, you're looking to do anything, you want to learn this commercial real estate world the way that we do it, then grab us over at Legacy Alliance .club. If you're already an active investor and you want to put some capital to work and take advantage of what this big bill could do for you, then reach out to us at Freedom Venture Investments. But we'll package this conversation up. We'll get the fluffier bits out of it, but we'll make it more concise for you. But, these are the conversations that we have. What would it be like if you were participating in high-level CEO-type conversations, talking about investment dollars, right? Retirement accounts, etc. What would it be like if you could run alongside a company like ours? Would that be of massive benefit to you? And if it would, then you've got to step in and lean in a little bit, ask some questions, and see where we can connect. So again, Dave Seymour, LegacyAlliance.club, Freedom Venture Investments. Eric signing off from Freedom Venture, and also Walter Novicki. And I'm so glad we didn't have to see his face for the whole call. Take care, guys. We'll talk again.